Friends, today I have an update for a company called NRB Bearings Ltd. The company has announced a CAPEX plan of 200 crores to expand its production base so that it can support the European OEM orders. The shares of the prominent bearing manufacturer gained 2% after it it announced the plan for manufacturing capabilities with an additional R&D capital expenditure of 200 crores, with a market cap of 2,195 crores, trading at 226 rupees per share at around 0.11% as compared to the previous closing. Reason for the rise: the shares of the NRB Bearings Ltd have seen positive movement after the board of directors approved a 200 crore investment over a period of 2 years to expand manufacturing and support rupees 600 crore pipeline from the European Tier 1 customers like BMW, Stellantis and Renault. The expansion focuses on increasing capacity for various bearings and upgrading heat treatment infrastructure and scalability. The company is expanding its presence in the EV and hybrid vehicle segment, securing rupees 1200 crore, rupees 12 crore in additional lifetime business for next generation e-drive platforms from BMW, Stellantis, Renault and Mercedes-Benz. This adds to its rupees 400 crore nominated business with supply commitments lasting till 2030. Management commenting on the performance measures. Harsh Bina Zaveri, the managing director, said that these new nominations reaffirm our position as a trusted partner for Tier 1s and global OEMs. Our ability to win critical programs across EV, hybrid, and ICE platforms demonstrate both the strength of our engineering and our focus on execution. With our expanded capacity and deepening role in e-drive systems, the company is well positioned to support the future of mobility. Financial growth: looking forward to the company's financial revenue performance, magnified by 8% from 258 crores in Q3 FY24 to 279 crores in Q3 FY25. So, quarter on quarter, quarter 3, year on year, 21 crores increase. Further, during the same time period, the net profit plummeted by 87%. So the profit was 166 crores in Q3 FY24 and it has come down to 22 crores in Q3 FY25. Domestic customers: it has over 90% of the vehicles. It holds a 75% market share in needle bearings and 56% in cylindrical bearings, supplying major brands like Honda, Bajaj, John Deere, Hero, Mahindra, Maruti Suzuki, Tata, Ashok Leyland and Sonalika, Asia, TVS and Royal Enfield. The NR Bearings has a strong global footprint with presence across North America, Europe, Asia, Middle East. It operates manufacturing facilities, regional offices and warehouses in key locations including USA, Mexico, Germany, Dubai, India, Thailand and Japan, supporting its extensive international operations and customer network. NRB Bearings Ltd is an India-based company that is engaged in ball and roller bearings business. Uh, the company's product services include needle roller bushes and cages, ball and roller bearings, and automobile components. So, disclaimer: the views and investment tips expressed by the investment expert, broking houses, rating agencies through the internet are of their own, and there is no personal input from my side. Investing in equity poses a risk of financial losses. Investors must therefore exercise due caution while investing or trading in stocks. The author, which is myself, of this article is not liable for any loss caused as a result of the decision based on this article. This information is gathered through the article on the internet. Please consult your investment advisor before making any investment. So we'll go through some further details and some graphics that I have to share with you all. Just a minute. Yeah, this is the current price for today, 226 rupees, down about 0.34%. Then last 5 days the company's lost about 5.6% in value. Overall, you can see in the last 1 month the company has gained a return of 11%, and over the last 6 months you can see the company is at a negative loss of about 11%. Overall, the past 1 year you can see a drop in value of about 28%, which is a substantial amount comparing to the market trends where the other companies or stocks have been impacted. The the trend seems to be a bigger impact on this company compared to the other companies in the small and medium scale uh, indices in both the BSE and Sensex indices. So NBA Bearings to invest 200 crores in production expansion across key facilities. So this is the kind of bearings that the company produces. So this is a little bit of write-up based on it. Its manufacturing plants in Jalna, Chikaltana, Valuj and Hyderabad. The expansion is set to roll out over the next 2 years. It is designed to meet the rising demand in Indian and global markets. Uh, New capacity will be in effect from FY26 last quarter and 2027. Okay, so this is some information about the management. This is the logo of the company along with the brand name. Then stock prices may face volatility due to the investment structure. Stock is at a premium valuation at this point. The company knows very well to utilize its assets, so the company is managing the assets very well. The company possesses stable growth history and manageable debt. Face value 2 rupees, price to book value 2.4. Dividend yield 2.26, book value 94, cash of 68 crores, debt of 126 crores, and promoter holding 51.2%. Earnings per share last 12 months 9 rupees and 65 paise. Sales growth of minus 0.04%. ROE 33.66%, which is very good. Net profit 191%, which again is very good. So it is a part of the small uh, S&P BSE small cap index. Then you can see comparative to the other peers in the industry, you have company with a small capital of 141 crores to as high as 51,000 crores. So you can see the different comparison price wise of the stock from as low as 230 to as high as 3,900, which is STF India, which is a large substantial player in the market. So you can look at the price to book value and price to earnings ratio. So SKP Bearings 28, Bimetal Bearings 21, Galaxy Bearings 14, SNL Bearings 13. So those are the some low valued price stocks that you all can consider. Please do your thorough research analysis and consult a financial stockbroker. Look at the prospects and the market share of these companies in this industries compared to NRB Bearings. Look at the earnings per share and the value of each share price. So that will give you a better idea of which stock to invest and which stock to hold. If you already hold any of these stocks in your portfolio, then look at the return on capital employed. So you have ROE of as high as 33 to as low as 4. So again, that should give you an idea of which particular stock to look at. So you can see the high market cap company like Sheffield India is giving you an ROE of 19%, which again is a decent size, but however, compared to NRB Bearings, you can say the value addition or the return is lower than the current company we are looking at. Then you can see promoter holding of 51%, out of which 91% of the shares are pledged. So this makes the stock very volatile, because if the if the promoter has to sell off his shares to pay off the debt or a loan that the promoter has taken, then the stock would be up for sale to the public, and that will create a big volatility in the stock and the price of the stock and the amount that is traded on the exchange. So it will create a negative impact. It will go into the oversold zone, and the current price of 226 would cause a lot of pressure, and the stock would correct, and you will see again a big drop in the price. So NRB Bearings have pioneered in the manufacturing of needle roller bearings in India since 1965. More than 90% of the vehicles running on Indian roads are running on bearings manufactured by NRB. The company is engaged in the business of manufacturing ball and roller bearings, having its applications in automotive sector as well as mobility applications. Then some of this information we've already been through. This side gives a more realistic return on equity and return on capital employed, that is around 14, between 12 to 14%. So a little bit more detailed analysis is required. Face value of the share is 2, earnings per share TTM was about 10 rupees. So we'll have to look at it and see uh, how much and what really is the return on capital employed. Company has delivered poor sales growth of minus 2.54% in the last 5 years. Promoters have pledged 91% of their shares. So the company is maintaining a healthy dividend payout of 17-18%. Debtor days have improved. Company has managed to reduce debt. So these are the comparisons that you have. You have an addition here of temp in India to compared to the other side, and again you can see 23% return on capital employed by Temkin. You have a median of 8 companies, average median is 23. Then you can see the net profit is reduced compared to what it was in the previous quarters, so which is again a negative sentiment to the stock. Sales have also reduced. Overall year-on-year comparison, you can see there is an improvement, however not expected as compared to the performance. You can see 242 crores have reduced down to 115 crores in net profit during the last 12 months, which again is going to negatively impact the stock price of the company. Stock price minus 28% in the last 1 year. Sales growth of 3%, profit growth, no profit growth, return on equity 13. So this side gives a more realistic picture. Last 5 years, ROE is about 14%. So reserves have increased in the last 1.5 year from 648 to 912 crores. Borrowings have reduced in the last 18 months, which again is a very good sign. Then debtor days reduced by 20 days, which is an amazing sight. Inventory has increased, so something that company can look at. Days payable have reduced, which again is a good sign that the company is able to pay its suppliers quicker than it was able to do in the past, which is a good sign for the company. It has some surplus cash, and it is able to use that money to pay off its creditors, which gives a goodwill, which builds a good goodwill in the market for the company. Working capital days 168 may still be on the high side, and something that the company can look at fixing or improving. Again, this is what we've already been through. So friends, that is all for today for this particular stock. Thanks for watching. Please share this video with your friends and family and associates, those who will benefit from this information. Another stock that you can keep track of, if you're looking to invest, please consult a stock investment broker so that they could give you some expert advice on this company. So thank you for watching once again. We'll connect with another video tomorrow. Take care. Thanks for watching.